What's going on, everyone? Today we have to talk about Zora. So we're going to go over this. We're going to talk about where I think the price of Zora is going to go next. And also, this video came directly from a member of the channel, so shout out to you. And if you guys want to go ahead and become a member and have me go over specific projects like you for this and do a full technical analysis just for you, go ahead and sign up. It's only $9.99 per month. And to request a video when you become a member, just go ahead and leave a comment on any one of the videos that I have here. So shout out to all you guys. Shout out to all the members. Let's get straight into it. So currently Zora is a little bit flat for the week, and really for the last 14 days, last 2 weeks has been pretty flat. But we are still up 30. Well, we're still up 56% in the last 30 days. So that's good. The volume is actually pretty good, still at 90 million. 414 million inside of market cap. So Zora has been doing good on all of the fronts. Now, my last Zora video, if you look it up, you're going to see me talking about something called a ascending triangle, right? A bullish ascending triangle. So we were supposed to have this bullish ascending triangle. So in order to see this well, I'm going to take this off, and I'm going to take this off, and I'm going to take the Fibonacci's off. So now you can see it. And really, a bullish ascending triangle, as you can see here, is a bullish pattern. But the thing with the bullish ascending triangles is they only have a 54% win rate. Actually, no, this is actually the bullish symmetrical triangle. Wrong one. The bullish ascending triangle actually have a 72.77% win rate. So it just so happened for this one that we didn't break out, but we also didn't break down to the downside. So that is very interesting right there. The fact that we didn't break down to the downside, and we didn't break out to the upside either. So now our whole thesis with this bullish extending triangle, I guess we could say, is out the window. But we can still extend this. We can still extend the bullish ascending triangle. We can extend it out further, because it's still inside of the same pattern. Technically, it's still there. So we still have the possibility to jump here all the way up here to 11 cents. We still have that possibility, and we still have more bullish possibilities. So let me bring everything back full circle here, and then we're going to go ahead and do the same thing and extend the bullish ascending triangle this way, and we're going to extend this one as well. So as you can see, it has been extended, but I don't want you to pay attention to the bullish ascending triangle. I want you to pay attention to this big symmetrical triangle that we're in right now. So this is a bullish symmetrical triangle, and the bullish symmetrical triangle actually has a 54% win rate. So the win rate on a bullish symmetrical triangle is much lower than a bullish ascending triangle. So just remember that. So even though we are in here, we can still lose to the downside, right? Even though we're here. And look, when we finally break out of these patterns, we're looking at 20 cents. 20 cents is the resistance, and that's 100% from where we are now. It's a little bit over 100% gains actually from where we are now. But from where we were before at 10 cents is 100%, guys. So 100% gains. This is high stakes right here. I think that Zora could break out to the upside. And the beautiful thing about this pattern is, even though with this bullish ascending triangle, we didn't break out to the upside, even if we break down to the downside of this pattern, we come down here to the bottom of our bullish symmetrical triangle. So we're still in a bullish pattern. So even if we break down, you're just getting a discount on the price for a bullish pattern. Now, it doesn't necessarily mean that we're going to break out to the upside just because we have a bullish symmetrical triangle. It doesn't always happen that way. A lot of times it does not happen that way. A lot of times it will still break down to the downside. Remember, it's only a 54% win rate. That's something you got to keep in mind. A 54% win rate for a bullish symmetrical triangle. And it could go either way. But I love the symmetrical triangles though, because either way it goes, at least you know when it's going to do it. You can track when it happens, so you can be patient, and then you can make your execution right at the top of it when it's about to break out, or right at the bottom when it's going to break down. So that's usually how I do it here. Now we also have the percent R trend exhaustion down here. We can see that the short-term trend is pulling down, and the long-term trend is pretty much sideways. So this shows any weakness to the downside is very short term, and it's going to be immediately followed by an uptrend probably. So that is another thing to keep in mind. So yeah, this is pretty much all I got for Zora. We're still going through this pattern. I'm gonna keep you guys updated. Big shout out to the member that requested me to go over. I'll do a full video on synthetics for you tomorrow on the next other videos, because I like to do 5 videos per day. So we just now went over Zora. I'll do the synthetics one for you tomorrow. And as you can see here, this is the synthetic. So I'll just give you a sneak peek on what we have in synthetics before tomorrow. So for synthetics, I do still see a pullback here. I think synthetics can pull all the way down to 92 cents here. The support at 93 cents, actually 93 cents. The support at 93 cents looks like it is, or like it could be, the next area for us to land. It does look like we have a little bit of support right here. So possibly look for it to stop at about $1 flat before it goes down to 93 cents. It might stop down to $1 flat and then try to like recover from there. But ultimately, we're looking towards 93 cents right now on synthetics. So that's what we're looking like for that. And then if you look at the daily chart, synthetics is still breaking down. First, let me pull over here to the weekly chart so you can see this, and I might as well just include all this in the video. But shout out to the members, and shout out to you again for recommending me going over Zora and synthetics. And again, guys, become members of the channel so you guys can benefit the same. But anyways, as we are seeing, I think we're gonna go a little bit lower here on synthetics. For one, our MACD here, as you can see, the buying volume is pretty strong. But it doesn't look like it's slowing down right now. That's the weekly chart. And then when you come over here and look at the daily chart, though, like, I don't like how the percent R trend exhaustion looks. It isn't fully all the way down there yet. So it hasn't sold off all the way yet, in my opinion. I don't think it's sold off all the way yet. And then also, all this selling volume on the percent R trend are on the MACD for synthetics is looking a little bit nasty. So yeah, again, I think we're gonna come down here to 93 cents, and then if that breaks, then you're looking for 51 cents. But synthetics has kind of already proved that 50, like this level down here, 52 cents looks like a bottom. It kind of looks like a bottom for synthetics. And the thing with these descending channels, they're actually they can actually be bullish and break out to the upside. And this one not only looks like a descending channel, but it almost in a way looks like a falling wedge. Almost. Not necessarily, but you know, a descending channel is like the channel version of a falling wedge. So it's kind of like a falling wedge. So this is a bullish pattern here. It's only a matter of time and patience. So let's say if you wanted to get in at 93 cents, or even if you're in now, it's looking good for synthetics. But what I don't like is the fact that they have not had a rally like this since 2021. So hopefully during this altcoin season they can. On the upside though, when we finally break out of this channel, the next range for you to eye here for this is going to be up here. This is about 336%. That's crazy when it gets to $5. So synthetics, you're looking at some good gains. It's just you have to be patient and you have to really believe in it, because if you don't believe in it, like if you look all the way back here, like synthetics hasn't been at this price that we're looking at, that 336% up there, hasn't been there since March of 2024. And then before then, it hasn't been there since April of 2022. So synthetics has a long track record of doing absolutely nothing and going down for 2 years straight, and then coming back, but not doing as good as the other 2 years, like the past 2 years. So that's actually pretty bad. So I would say be careful with synthetics, just because, you know, just looking at its track record, I mean, if it can go like that for 2 years, what could it do for the next 2 years, right? So if you also look at the weekly chart, synthetics has never been overbought on the weekly chart. It hasn't been overbought since January of 2021. Since January of 2021, synthetics has not been overbought on the weekly chart. That says a lot. Like, that says a lot. So be very careful, because the fact that they don't have enough demand and they've been out for so long. They've been out since 2018, I think even 2017, but they haven't been overbought on the weekly chart since 2021, the beginning of 2021. So that's a whole 4 years ago, and they haven't been overbought since then. Almost 5 years ago now. Like starting next year, that's 5 years ago, and they have not been overbought since 5 years ago. Like that's actually crazy. So I would say be very careful. Synthetics is a waiting game. It's a very long waiting game, and if you're not willing to wait, then I would just say hop out. But other than that, if you're okay with waiting, I do see it eventually hitting $5 eventually. But if this bull market ends, because I think by the beginning of next year, sometime January, possibly February of next year, I think the bull market will be over. If this doesn't do that by then, synthetics could be dumping and just trading sideways for the next 2 to 3 years till the next bull market. Like, be very careful with synthetics. But also, don't just go off of me. Go off of you. How do you feel? Are you down on synthetics, or are you up on synthetics? You're more than likely down on synthetics. And if that's the case, then you also got to think, if you sell, what happens to synthetics now? Is it just going to take off? It quite possibly can. It might be in a falling wedge pattern right now. That's kind of how it looks. And then we also have a descending channel where it could break out to the upside. So I think eventually it'll do it. But when you look at the time frame on synthetics, like this is the weekly chart. If it got all the way up to this area, this is August of 2026. Right here is August of 2026. Just let that sink in. Like synthetics, it might be a slow mover, because on the daily chart it's still selling off, still showing weak buying pressure. So again, be very careful. But can it do it? Yes. But you gotta have some faith in this coin. I don't have faith in it because it's not what I trade. I don't really I just don't have faith in it. I don't know much about the coin. I don't really look at the coin as something that I would buy personally. So that's me personally. But could it do good? Yes, it could. But it's not something for me. But anyway, shout out to you guys. Shout out to all the members of the channel. Shout out to the member that recommended me to go over these two. Big shout out to you. Hit the like button and subscribe, guys. Go ahead and become a member, guys. It's only $9.99 per month. And I'll do a deep breakdown on whatever, just like I did here. So shout out you guys. And as always, I'll be back with another video.